Thank you, Sahil, and thank you to the panelists for this wonderful discussion. I will not even try to summarize what transpired in that discussion. It was quite complex. It covered all the difficulties of political economy, business model differences, which can create difficulties in adoption of UPI, but also showed some pathways that could work. Now we move to a completely different topic, but not unrelated because it's still got to do with payments and currencies. Cryptocurrencies have gone from a mysterious phase to almost a cult status in just a matter of couple of years, and they inspire very different responses from governments across the world. Some countries have embraced them, like El Salvador. Some countries have just cracked down on them and said they will not allow any cryptocurrency trading to happen. Uh, but there's already $2 trillion worth of market capitalization riding on cryptocurrencies, and they might be here to stay. So today's panel discussion will focus on the conceptual foundations of cryptocurrencies, the future of the technology that is underpinning the cryptocurrencies, risk perception of regulators, and what possible pathways may be there to navigate the promise, the perils of cryptocurrencies. So it's early days, in spite of the large market capitalization, still early days for the technology, and all the questions are open, so the panel has been designed in such a manner that those questions can be asked and answered. The speakers are Mr. S.C. Garg, strategist, economics, finance, and fiscal policy is how he described himself, but he was also Finance Secretary of India, and he worked on this issue very closely. Mr. Robert Green, non-resident scholar, Asia Program and Cyber Policy Initiative at Carnegie Endowment for International Peace, and Mr. Vivan Sharan, he's a partner at Cohen Advisory Firm. The moderator is my colleague Priyadarshini. She's an associate fellow in the Technology and Society Program in Carnegie, India. Priyadarshini.
Joining us on this panel today on cryptocurrencies, the future of technology and regulation. I'm Priya, as my colleague introduced. I'm an associate fellow at Carnegie, India, and I will be moderating this panel. From a little-known invention over a decade ago, cryptocurrencies, or crypto assets as they're increasingly being called, have seemed to have come of age. The cumulative market capitalization of cryptocurrencies has now touched $3 trillion last month. Of this, Bitcoin, the original cryptocurrency, makes up the bulk. But even as the ups and downs of Bitcoin prices continue to garner a majority of the eyeballs in the space, many other developments have been afoot. To name a couple, there is now a serious amount of capital chasing cryptocurrency space, whether from institutional or retail investors. In India, there are nearly 15 million retail investors trading in crypto assets by some accounts. This year, we've also seen 2 unicorns in the crypto exchange space in India. Cryptocurrencies are also spawning newer disruptive use cases like decentralized finance or DeFi applications that not only seek to transfer money or payments, but also conduct more sophisticated transactions like borrowing and lending without any intermediaries. There are efforts to address first-generation problems like volatility, scale, and the environmental fallout. For instance, stablecoins whose value is pegged to stable assets like US dollar are emerging. The second largest cryptocurrency, the Ethereum network, is attempting to move from energy-guzzling and expensive proof-of-work consensus protocols to something that is more energy efficient by 2022. Central banks and big tech companies have also thrown their hat in the ring. They're responding with challenges to cryptocurrencies of their own in the form of central bank digital currencies and stablecoins that seek to piggyback on the enormous networks that social media companies bring to the table. Crypto is no longer fringe or a fad, or so it seems. Regulators around the world are devising a number of strategies to deal with them. These range from restrictive to permissive to um, um, restrictive, permissive to cautious. So the question is, what next for crypto and crypto regulation? I'm joined by my three esteemed panelists. Each of our panelists brings a unique perspective to the table. As my colleague Suyash mentioned, Mr. Garg is the former finance secretary and also the Secretary of Economic Affairs in the Ministry of Finance in the Government of India. You could say that he's been in the thick of policy making, not just related to the financial sector, but also cryptocurrencies. He chaired the Interministerial Committee on Virtual Currencies that submitted a report in the middle of 2019 along with the draft bill. This is possibly the only report that's available in the public domain that sort of articulates the initial thinking of the government on the subject. We also have Robert, my colleague at Carnegie. Robert's research has focused extensively on the Chinese financial sector and specifically their central bank digital currency, the digital yuan. Robert has also worked extensively on cryptocurrencies as well as issues and risk strategies related to digital token trading platforms as well as exchanges during his stint, if I'm not wrong, as a senior advisor in the US Treasury. Our third and final panelist is also an economist by training, and he brings a ringside view, perhaps, to the innovation and startup ecosystem in India. He's advised numerous tech companies, and he's also guided many of these startups as a board member. I'd like to extend a warm welcome to all our panelists today. And before I request each of them to deliver their initial remarks, I'd like to request our viewers to key in their questions in the chat box, and we'll come to you towards the end of the session. Sir, if I can hand over the mic to you now.
Thank you very much, Pradarshini. It's a pleasure to be here. So the crypto world is emerging. It's grown big now, $3 trillion, as has been mentioned right away. And I happen to chair that committee which came up with a draft and famously or notoriously recommended banning the cryptocurrencies, which still define the narrative around and create a lot of interest, tensions and all. But let me say where we are now and how differently we sort of viewed it 2.5 years back. The knowledge at that time was quite limited, I must admit. And it was mostly sort of focused on the currency aspect of the crypto world. That there is a Bitcoin which has come up and which is sort of moving all around with its valuations going so ups and down. In 1 year, in 2017, we witnessed it going from about $3,000 to $20,000 in a space of 1 month. Then it sort of came down to about 4,000 again. And now, of course, we've seen it, it's gone to 70,000, came back. So there is a lot of gyration in the valuation of it. Of course, lot more people have come on the platform. Many more described as cryptocurrencies have come. There are thousands of them now in the world. So at that time, we were basically worried about that there is some currency which is coming up, which might sort of impact the central bank's currency, which is the rupee in India. And the people might get drawn into buying it without actually knowing that what is behind it, what is the true value of it. And they might get trapped either because of the valuation effects or maybe because of the there might be frauds behind it. None of us understood it very well. And the big thought was that the currency is the sovereign's business. Nobody else has any right to sort of issue currencies, etc. And therefore, the most logical and clear option for not only saving the mandate of the central bank to issue and manage currencies, but also to save people, is to sort of ban the cryptocurrencies, right? The fact that crypto world, which is a very innovative technology, sort of building on the cryptography to sort of organize the data and the access to the services which it creates by sort of very imaginative use of private, public keys, etc. And the kind of versatile uses which it can be put to, which now have come up. So we have, you mentioned about the decentralized finance, which is now emerging as a major competitor to the banking business and the finance business. Not only credit, but many other financial services can be done. We have over the years found another kind of currency which actually was the purpose behind the Bitcoin at that time, the so-called stable coins, which are sort of making it possible to make remittances, international finances, really in a much better and more efficient and costless manner. We also have now many uses in terms of assets, so NFTs and other things which have been done. So today, as you see, rather than in comparison to what we saw 2.5 years back, today's crypto world is a far more versatile and bigger world. Goods, services, assets, you can do on it. There is one feature which I think we can understand it better and better now, that in this world you have major platforms like Ethereum where you can create all these kind of services. But the unique feature is that since this world is literally a virtual world, not respecting any national boundaries or any geographies, it has created its own currency to sort of work at least on those platforms. While Bitcoin was to disrupt the central bank currency, most other platforms like Ethereum and Ripples and others are meant to use the currency or the cryptocurrency which they create on the platform. They're not bothered about its use outside. They are not into the system of sort of disrupting payments or being used as currency in the payment of your trade and other things. So I think what we should see today is a much larger and better and more useful use case of the blockchain crypto technology. Now that makes, to my mind, a vital difference in the way we had approached it 2.5 years back and the way we should approach it now. Increasingly, the currency aspect is becoming less important. The cryptocurrencies are not used for transfer of goods or payments and for that purpose. Whereas this has been demonstrated very clearly, not only by the cryptocurrencies in the international payments, but also by the fintech in the use of bank accounts you were discussing in the previous session, as the medium of making digital payments. That the digital payments are the future, and therefore probably the digital currency is also the future of the currency. And therefore, how do we deal with the currency aspect? Can the central banks come up with their own currencies? Can globally we can come up with some agreed international currencies? And if we are able to do that, bring the domestic digital currency as well as the international digital currencies, possibly the use of cryptocurrencies and the stable coins will itself go down under. So currency aspect, I think, now need to be separated completely from the discussion on how do we deal with the cryptocurrencies. So that's one take. Second, I think we need to figure out that this asset class is a very different asset class. This is the world where technology is there. This is the world where you can create products, all kinds of products. And this is the place where the currency is also its own. It's not interested in the outside currency. So it's a very different asset class. Whereas all other assets, if you would look at it, are sort of viewed and valued in the currency which is that of the central bank. And therefore, how do we sort of view this new asset class? And I think if we can figure that out, then we'll be able to appropriately decide how to deal with it and how to legislate about it. For example, just take one feature. It has a very different way of contracting. Smart contracts and all, without any human interference. The contracts are executed by the system itself and enforced there. You don't require another arbitration or the court systems to do that. So it in a way redefines the contracts itself. So there are several features connected with this, which of this asset class, and it's very different asset class than the securities or any other coin or any other asset class, and therefore we'll probably need to come up with a sui generis, a very different kind of legislation only to deal with it. And once that we figure out, I think we can decide then how do we regulate it. Should any existing regulators can do it, or should we require a very different type of new regulator? I think that's the way to go. The government said that they are bringing a law in this parliament. I think much of the session has gone, and still it is not there. It has not been considered by the cabinet. I would, in fact, suggest that whatever that bill which the government is considering should come up and should be placed in the public domain, and let there be a discussion, debate in the country and the world about it, and which will leave, I think, which will enable us to make a better law, and then maybe in the next sessions, etc., we can deal with it. I'll stop here.
Thank you very much, sir. I think I would agree with you on that suggestion. We'd like to see a bill, and I think we will all benefit from having a discussion about it. Vivan, if I can pass the floor on to you for your initial remarks, please.
Yeah, I think Mr. Garg has really, with his discursive remarks, laid out the landscape as it stands today. I think I'll just focus initially very briefly on what I feel the road looks like from here for government, for civil society and industry, respectively. So now that we're clearly not going down the ban route and blanket prohibition is not in order, what next? So first, I think, at the inaugural session, perhaps with Dr. Jaishankar, he made this point on globalization, which was pretty instructive. He said, we are not here to globalize just for the sake of globalization. It's for the sake of building national capability. And I think I see this as a moment. The crypto moment is a moment which is actually a reg tech moment, a regulatory technology moment. It's a supervisory technology moment. And what I mean by that is that naturally the regulatory perimeter is going to grow with the introduction of this new asset class. And as we've seen in nearby jurisdictions like Singapore, there has been a fair amount of innovation that the regulators have had to bring in to understand the risks and mitigate them. For instance, and these sorts of innovations have relied heavily on data analytics. I don't know how equipped our regulators are on these fronts, but there's a tremendous amount of cross-pollination that can happen with Indian technology companies. In fact, I would argue that our private sector ecosystem is quite ripe for the picking in terms of being able to work with the regulator to build that capacity. So co-regulation, of course, is also in order, where typically in markets like this where things are fragmented, you don't have line of sight on a lot of activity in the market, you're trying to grapple with it. As the US has done and many other mature jurisdictions have done, you try to work with exchanges where a bulk of the trading and volumes and activity happens. And you bring in a few other specialist agencies and companies to be able to assess where the vulnerabilities really lie. So that's the future of regulation, and of course there's an international element to it. You know, the FATFs, G20s of the world, even the Quad, where there's a critical and emerging technology discussion, IMF, which is now putting its hand up increasingly for a coordinated international regulatory effort. All of these are areas where, of course, India can no longer afford to send very junior officials or delegations that are understaffed. Our traditional approach to standard setting, which has been subpar. I see this as a moment where we need to transition. We need to force that transition even in international conversations and so on. As far as industry is concerned, let's be clear that there are two elements. One is that at some point, the regulator and supervisory institutions and all of us should attempt to look under the hood. There are a lot of risks when you open up this space and actually examine it that we have not fully understood yet. So I expect that the bill will be foundational in nature. It will, categorize and classify to an extent. It may even say there's a XYZ regulator, which, as reports suggest, is likely to be SEBI, which is a natural point of departure because SEBI has, back to the RegTech point, it has both a regulatory sandbox and an innovation sandbox. So it allows innovation to flourish in a closed ecosystem as well as an open sort of real market ecosystem. But it's really time to start to look at those questions that will complicate regulatory decisions. And as far as exchanges and other large participants are concerned, it's time to really step up on investor education. Cryptocurrencies, as with any other digital technology, there will be adverse events. When those adverse events strike, will we have done the preparatory work to be able to mitigate fallouts, including in the policy space? Because after all, in democracies, policy making around adverse events is reactive. It is a democratic function to be reactive in that sense. So a lot of work needs to happen in investor education. I don't just to take a pot shot at big tech, I don't think that if we assume that the baseline is what, say, big tech is doing around the world on data protection, awareness of users and consumers, if that's the kind of benchmark we're aspiring to in this financial tech world, it's not enough. We have these sort of long, legal disclaimers which we sign off on, and there is this notion that getting consent from users and consumers adds frictions, which can be avoided, and so on and so forth. I think we'll have to do away with that entire mindset and actually look at the strengths of industry, which is basically, as far as exchanges are concerned and some other financial intermediaries are concerned, is a very easy user interface. You do your KYC, everything happens automatically. You're not dealing with banks, you're not dealing with a demat account, you're not dealing with fragmented password ecosystem, etc. So if you can make user interface so simple so as to enable an average user from a tier 2, tier 3 town to be able to transact in the matter of 12 hours and then be sort of included. And we, as you said, there are 15 million or so participants. I don't know how many of those are stock market investors. I would care to venture that maybe 30 to 50% of them are being included in the financial market in this sense for the first time. And our financial market depth is not that much. As you know, there's only about 30 million people who participate in it, of which 50-60% are from Gujarat and Maharashtra and so on. So we have an extremely shallow financial market. The opportunity here to deepen that through this exists, but we have to build investor education awareness. Financial literacy cannot be, just a line item in an exchange's ledger and so on and so forth. And finally, for civil society, I know you have to move on from this, but it's time to address some of the harder questions that, say, even the Reserve Bank of India is trying to ask around financial stability. Is industry or government encouraging work around what the future of banking and digital payments will look like? Because we know that the natural extension of this ecosystem, it's not, I assume we are not permitting this ecosystem to take hold in India just for the sake of speculating on an asset price. Right. We're doing it from a strategic standpoint of building supervisory capacity so that we're not caught off guard 5 years from now. when the world has adopted it, if the world adopts it, and broad-based, it's more broad-based, and also with the potential of digital finance and digital financial inclusion in mind. And if that latter part of the story is to be kept in mind, then I think some of the questions around financial stability, what will happen to bank deposits, will there be a run on Indian banks, can we model some of this stuff out? Can we look at the stable coins things that Sir said? You know, there are a bunch of investigative efforts on in stable coins and, you know, violations of, say, the Foreign Exchange Management Act. But these are all gray areas. Lawyers like you will need to deal with these gray areas of whether people need to be authorized dealers before they are exchanging stable coins for currency and so on and so forth. So there are a lot of open questions that we now need to start addressing as a community.
Thank you, Vivan. Robert, over to you for your initial remarks, please.
Thank you, and I wish I could be there with everyone. Yes, I will build on some of the remarks that Mr. Garg and Mr. Sharan have already made. I think the general point I would start off with is that there are a lot of obstacles to international coordination in the cryptocurrency space, and one of those builds on one of the comments that was previously made about the fact that this is a very different asset class. And as a result of that, when regulators are looking at how to regulate this across various jurisdictions around the world, they can read the same set of facts, they can understand the technology quite well, but still reach very different conclusions. And I think you're seeing this, particularly with regards to some of the more highly traded digital tokens, where there will be regulators in the United States who look at those digital assets and think that digital asset is a security. And then you go to a place like Japan or Singapore, and those regulators can look at the very same digital token and think that digital token is not a security. And that, I think that issue stems from the fact that we have this very different digital asset. This very different asset class, but we're trying to essentially retrofit it into these existing regulatory buckets we have. Some jurisdictions are trying to create new regulatory buckets. So you have that right now in the EU, where it's contemplating various subcategories of digital assets. But that's also a very, very challenging way to go about this, and it could the downside of that approach is that if you cut these categories in the wrong way, then ultimately you could undercut the very type of innovation that you want. So there's you kind of can look at these various alternative ways of doing things. You can either have the stability of the current rules and regulations and try to put these new technologies in there, and that's a very difficult approach and can lead to different outcomes across jurisdictions. Or you can try to create these new buckets within the types of digital assets that exist, and that's also challenging. And I think that really gets to another point, is that when we talk about crypto and when we talk about this whole space, I think we have a lot of challenges with just our vocabulary. And I mean, this is something I've certainly seen since 2017. So we have a tendency to call, what do you call an intermediary that facilitates the ability to purchase and sell a digital asset that also enables customers to store their digital assets at that intermediary? Is that an exchange? Well, traditionally, exchanges in the stock market context don't offer custody services. Well, then is it a trading platform? And then what about when we talk about crypto, or when we talk about decentralized finance? What do we mean by decentralized? Is that at what point is something decentralized enough to constitute being decentralized? And there's no right or wrong answer to that as it stands right now. And I think regulators, these are very challenging questions that they're thinking through. And I think it necessitates, frankly, a certain level of humility in the sense that we've been dealing with some elements of traditional financial services for thousands of years. We have a pretty decent understanding of what a bank deposit is. We have a pretty decent understanding of what a stock market is. But and if you go to any finance class at a college, I think if you go to a high performing student, you ask them, hey, what's the difference between a stock and a bond? They can give you a pretty reasonable answer. But how can we then, the challenge we now have is, okay, well, how do you differentiate between Bitcoin and Ether? And how do you differentiate between Ether and Tether? And trying to kind of categorize these tokens, it's a very challenging thing. So I think that's one obstacle, these definitional issues and kind of how we fit this new technology into existing regulatory boxes, and also the challenges of creating new regulatory boxes. The second challenge is just different motivations in policymaking around this space, and I would say starkly different motivations. This is a virtual world, as the former minister said, and as a result of that, the way in which we think about applying jurisdictional control is very very odd, and so you see very starkly different approaches and not only just starkly different approaches into what regulators want to do, but also to the extent to which they follow through with what they want to do. And just a few case studies there. So number one would be looking at China, right? So China has a very interesting relationship with cryptocurrencies, and I'm putting aside blockchain. I'll get to blockchain and the distinction between cryptocurrencies last. But I mean, China has had this recent crackdown, and this recent crackdown, though, it's accelerating, but it still has OTC markets in that facilitate the purchase and sale of cryptocurrencies. And now China has issues with, I should say Beijing and the officials in Beijing have issues with certain elements of cryptocurrency. And one of those major issues is that it facilitates it facilitates capital controls being circumvented. And it also, if you look at certain blockchains, they're able to, since they're so open source, that technology is at odds with the idea of Beijing's vision of cyber sovereignty. The other extreme, though, is then you have a country like El Salvador, which just essentially made Bitcoin legal tender. Now, if you look at what El Salvador did, one of their stated motivations in their law of why they like Bitcoin is that it is actually relatively globally dispersed and cannot be, in those officials' views, controlled. So you have fundamentally similar technological features that are driving very different responses from policymakers. And then there's the enforcement question. I mean, you have a country like Vietnam where there's serious, on paper, regulatory obstacles to using Bitcoin, but then if you look at kind of what's happening in practice, adoption is quite high. So I think you're gonna, and we can talk about that later, the enforcement challenge, but I think you're seeing this kind of the virtual world point that was made earlier. I mean, that really, I think, plays out in just, how comfortable are regulators with a technology that is fundamentally global, that is fundamentally open source. That's challenging. And then the final point I'll make is why I think regulatory coordination is going to be difficult is there is a fundamental. You often hear folks say, well, we like blockchain, but have some questions about crypto. One of the issues, though, is that a lot of the people who work on blockchain really like to work on crypto as well. And you've seen this play out, I think, in China, for example, again, where, just this fall at one of the flagship events for blockchain in China, down in Shanghai, some of the folks speaking there are some of the leaders and founders of some of the most prominent open source blockchain protocols out there. And so it's very interesting to see that tension. And I think fundamentally what that could also, what this will all then lead to is it being quite challenging for regulators across the world to all get on the same page in terms of how to regulate crypto. And I think if you look at the current trend line, and just one data point out there, in midsummer this year, about 58 out of the 128 jurisdictions that were in the midst of implementing these called FATF standards, FATF, these global anti-money laundering standards. About 58 had implemented these new standards with regards to crypto, but the rest of the 128 had not. And I think that just kind of speaks to the implementation challenges, the fragmentation that is going to, in part because of the definitional challenges, in part because the different understandings and appreciations of the technology, and then in part because of this fundamental tension on wanting to attract blockchain innovation, but having some questions about those former issues, that this will all then continue this trajectory of making coordination very difficult. Thank you.
Thank you so much, Robert. I think you've laid out the challenges beautifully when it comes to implementing any regulatory frameworks around something like this, that is borderless, that's digital. I want to step back a little bit and ask you a little bit about the technology itself. This is a question for you, Robert. So this year saw one of the largest private equity investments in the crypto exchange space, an exchange called FTX. This was led by BlackRock, which of course is one of the largest PE funds in the world. And what intrigued me was that along with BlackRock, you also had investments from the Ontario Teachers Pension Plan. And as you know, pension funds are risk averse, they are patient capital, they have a long-term horizon. So what I'm wondering is, what is driving this institutional interest in this space? And what exactly are they betting on? If you could throw a little bit of light on that.
Yeah, sure. I'd say a number of things. So first of all, I would say, for starters, I mean, there's a view, I think, increasingly that even though there may be international coordination challenges from a regulatory perspective, that increasingly in certain jurisdictions, there is more comfort level that certain subsegments of the digital asset space are going to be okay and they're going to grow long term, right? So at least, speaking from the U.S. perspective, Bitcoin is in particular, the regulatory understanding of how Bitcoin is going to be approached is increasingly clear. So I think so since this is the title of this event is has regulation in it, I'll start with that. But secondly, I think that folks in the investment community and long-term thinking institutional investors, they see this technology and see these intermediaries playing a critical role in the future of finance, and that fundamentally this is beyond just trading and speculation, but rather there are fundamental services and fundamental partnerships that can be built between these new intermediaries and areas of the economy that are not related to finance. And I think we touched upon that with NFTs, and I think NFTs, the way that they're talked about oftentimes, it's in a context that doesn't necessarily get at the idea of registration of ownership on a public blockchain, the idea then also of improved payments speed. I mean, all these potential benefits. I think people see these innovative companies attracting incredibly talented people, and they see these companies as having a very bright future. And you look at again to that last point I raised in the introduction. I mean, there's a certain amount of, I think countries are looking around and saying, well, look, if this doesn't happen in my country, it's going to happen in somewhere else. And you saw that. I mean, you've seen that in a number of instances where there's a fundamental desire, I think, to attract talent in this space under the understanding that this is going to facilitate long-term growth.
Thank you, Robert. So did you have a response to that question as well?
See, my sense is that technology is something which you can't regulate. Technology is beyond all new technologies which come up. If you look at the major technologies, let's say wheel or steam technology or internal combustion engine or digital e-commerce, whatever, they have been adopted by the world by the force of their sort of being better than the existing one. They have always been registered by the existing incumbents because they are disrupted, their interests are adversely affected. For example, even look at what is happening on the e-commerce space. So the e-commerce is disrupting the existing shops and other kind of things. It will happen. They will gradually phase away. The automobiles disrupted the bullock carts and all. So this, I don't think the technology, which is the blockchain crypto technology in the digital space, this seems to be far more versatile, better than the centralized database technology on which most of the financial services and the financial assets have been built. So I don't think, as far as the technology is concerned, that anyone need to regulate or can regulate. This is better. This is today, if you just, even in the context of the currencies, you look at it, these stable coins are enabling instantaneous payments across the world. Either way, you make payment for purchase of goods and services or you make remittances. These are 10 times better than the international payments which are enabled by the SWIFT or the other banking technology. There is no way you can resist or you can stop this. Whether you do it officially or the public system does it and take over this space is what you can decide. But this is going to come. I'll just give you a reference. Even today we all understand the banknotes currency as if these are all central banks products, right? But banknotes were introduced by the rich guys and the bankers in the private space, because they found that was a better way to do business than doing the metal coins. You can't take it. So they issued promissory notes in the form of those banknotes, and which gradually sort of became the best medium of exchange. And then the central banks took it over. And then they issue it. Likewise, I think the opportunity is there that the stable coins, which is the best and the much better means of doing business, and the payments today are adopted by the international community and the domestic communities or the central banks. So technology, I don't think is the issue where we should focus in terms of attention regarding regulation and all. The products are the issues, right? The assets you create or the businesses which you create. In the financial space, the SEBI regulates the securities. Securities are the product of the technology, the centralized technology, or earlier the paper shares in the dematerialized, in the undematerialized world. So that is where you can, and here, since they pose a very different kind of challenge, you don't know what kind of Bitcoin is Indian, what is where, what kind of Ethereum is owned. So probably you will need to sort of, in case you want to make a national legislation, you will need to deal with what Indians own it, like what we deal with in terms of foreign exchange regulations, that what can you do in terms of dollars, what you can do in terms of euros, what can you do in terms of these cryptocurrencies. So I think as far as technology is concerned, the government or anybody should not simply even think about regulatory aspects.
So it's the use cases that we need to think
Absolutely.
about. Sure. Vivan, if I can quickly bring you in, you made a very compelling case for the next steps that we need to take to build capacities to regulate, something like cryptocurrencies. But if I could just take a quick step back, can you tell us a little bit about the crypto ecosystem, how it has grown in the last 2.5 years since the IMC report came out? And what do we stand to lose if we take the prohibitory route?
I'll do that, but I also want to respond to a couple of things that my previous speakers have said. I think this question on whether we retrofit to securities, commodities, regulations, or whether we create a new superstructure for this asset class or category of asset classes is very important. I think, again, the bill will be a point of departure, but it will certainly not resolve this debate. As things stand, while we can accommodate a lot of elements in existing laws, so for instance, money laundering is a central concern as far as policymakers are concerned. Vis-a-vis crypto regulation, there is a very simple way of bringing crypto exchanges under the PMLA, which is the Prevention of Money Laundering Act, and so on and so forth, put obligations on them. There are international standards now, such as the travel rule of the FATF, which has existed for a long time, but exchanges globally are implementing that in the crypto asset ecosystem, which is something to learn from. There are ongoing pilots at scale around this. So I would encourage some of the people in the audience who are curious about how money laundering in this cryptic ecosystem can be managed. There are ways, and those are being put to test. So just on that question, I think we'll have to, obviously there are elements where retrofitting is possible, but there are other elements where I think we will, as Mr. Garg also pointed out, need to explore new regulatory legislative constructs, which is where attention of civil society and industry should also be in the years ahead. We don't necessarily want it to become the case we've seen in e-commerce. So I don't know how many of you are familiar, but over the last 10 years, there have been questions asked in courts often, through PILs most often, of ministries of the government of India as to who regulates e-commerce. And most of these are the traditional understanding of e-commerce, which is marketplaces, essentially. And the answers have been ambiguous all throughout, and now it's kind of like a whole of government answer that we give, which is fairly standard, that the RBI regulates some elements of it, the Commerce Ministry does others, MSME Ministry does others, MeitY does the IT backbone, so on and so forth. So there's about 8 or 10 guys involved. It's very much like how crypto regulation is evolving in the US, even though the SEC chairman is in a turf war with everyone to sort of grab everything and call everything a security, which is a bad idea. So, there are elements of whether we want a consolidated regulatory oversight or we want a fragmented one, which really need to be reconciled in India in the years ahead. On the point that Robert made on why there is excitement and why teachers are investing into this and so on and so forth, I think partly also we have to ask ourselves the counterfactual question or the counterintuitive question, which is if engineers were not, leading the space, so to speak. I mean, how many of us truly know what the technology backend looks like? How many of us know what a hash function is or a Merkle tree is and so on and so forth? And I think just by virtue of engineers leading the charge on the space, we have outsourced our trust to some of them.
Right.
And I think we need to now take back some of that trust and really work with the engineers to figure out the policy risks and ways to mitigate them, because there, as I said earlier, there are quite a few. And just this blind faith in the fact that people who are capable at engineering will understand the interface between technology, policy, society, globalization, and the future of everything is perhaps a little bit misplaced. And I think while money is chasing that prospect right now, and that's why the exchanges are, liquid and, lots of investments, I think that element of outsourcing trust to people who we think we should trust, we need to build their capacity to understand these other spaces. And I think that needs to happen in India too. So coming to the Cambrian explosion in India around crypto, I think if you go to any engineering college, you will find at least 5 or 10 kids working on blockchain and crypto. And again, coming back to Robert's point on blockchain and crypto, let's be clear on the incentives mechanism between crypto and blockchain is inexorable, intrinsic, and an innate part of development of blockchain will have to come from enablement of crypto as an asset class in India. You cannot de-link the two. This is a prevailing misconception even today among legislators and policymakers in India, and it needs to be dispensed with. Because the incentive for developing things atop the blockchain layer come from the ability to value crypto and so on, and mine crypto. So I think that Cambrian explosion in India, in university campuses, in exchanges, and companies like Polygon and so on and so forth, it's quite phenomenal to see. We have entire ecosystems built on top of, just like has happened in the case of UPI, where you've had this Cambrian explosion of fintech 1.0 or 2.0 on top of UPI. You've had now on top of Ethereum and Matic and so on, a lot of innovation that has happened in this space. The one thing that I would say is important for all of us to do is not kill that momentum, but certainly to regulate it without blind faith.
Sure. Thank you so much. I think we don't have much time, but maybe we can fit in one question, one or two questions. Yes, please.
Thanks. I'm Dr. Charu Malhotra from Indian Institute of Public Administration. My concern is particularly about how bitcoins became popular through Silk Route in dark web, because payments were being done anonymously, and the recent colonial pipeline burst, US government could thankfully nab the IP addresses from where the payments were done. But a country like India, we are still not sure. You talked about capacity building. You talked about ever-evolving, technologies. My concern is, how do we ensure that this use of crypto for anything which is against the country's interest? Forget about money laundering. It's just one of the issues, okay? I remember there was a body called as FATF, which is actually a global body of terrorist financing. So what is your take for a country like India? Crypto exchanges will have more responsibilities for eKYC, but how do I ensure, this crypto belongs to Indian,
Sure.
etc.?
Sure,
So that's my question.
Would you like
Thank
to take
you.
a quick shot? We are out of
So
time,
I think this is very well said. Crypto is enormously susceptible to misuse by all kinds of people, whether in that Silk Route case, many, have been documented. This is all over. Terrorists have done it, smugglers have done it. All kind of people have misused. Even some of the countries have got very badly affected because of this. But when we try to sort of think of how do we save Indians or India from that, we must know what it is capable of and what we can do to sort of prevent that possible misuse in India. Sometimes we come up with solutions like, we will ban it. Now, that does not really solve the problem, because even if you ban officially, none of the Indian guys would be stopped from buying, and there are 100 ways in which it would happen. So trying to do in a way which is not effective is not the best way to go about it. So we'll have to figure out, or maybe you can sanitize. So to some extent, a lot of discussion happens around the exchanges, because the exchanges are the door, or the exchanges are the medium by which the Indians are acquiring the cryptocurrencies, including Bitcoin. Maybe if we can make that exchanges sort of regulations safe and reportable, maybe to that extent, but that will, please keep in mind, that will not obviate the outside exchange transactions in that. That's money laundering. We have this law which makes certain entities sort of reporting entities, that they need to report the transactions to the certain authorities in the government, especially the suspicious transactions, right? And under the Money Laundering Act, you can sort of prosecute people for committing something which is an offense already. Dealing in cryptocurrencies is not an offense in the country right now. And even if it is reported, the transactions are not reported, you will not be able to do action under the money laundering action, right? So I think it's a complex situation. It would require very sort of ingenious kind of response to be able to do to protect Indians, right, to my mind. I think it's a lot need to be done to be really able to figure out how to do it.
Thank you, sir. Thank you to all my panelists this evening for this really insightful discussion. Thank you to all our viewers for tuning in and for being with us today.
Thank you very much.